decision tomorrow afternoon. Dow closing on 311 points. S&P up just over 1%. NASDAQ closing off just over 100 points. Like Jerry mentioned, all 11 of the S&P sectors moving to the downside here as we await the Fed's decision on rates tomorrow. Let's bring in Nancy Tangler, Laffer Tangler Investments CEO and CIO, and we have Will Rind, Granite Shares founder and CEO. Will, let me start with you. Another day of selling here as we await the Fed decision. What's your takeaway and your expectation for what we are going to hear from Powell tomorrow?
Well, that's a key question. I think the market expects a 75 basis point raise, but clearly the worry I think today in today's price action is that it could be more, and it could be 1%, which would be the first 1% move that we've seen certainly in this tightening cycle. So I think the fear is that some of this rhetoric that we heard at the last meeting continues, and that actually the move is perhaps more exaggerated than the 75 basis points.
Hours away now, the market's not waiting around to find out what happens either. The question is today's sell-off a precursor to an even bigger move tomorrow, or will the Fed chair soothe investors just when they need it the most? Let's ask Virtus Investment Partners Chief Market Strategist Joe Terranova joins me right here on set. It's good to see you.
Good to see you.
24 hours away. What are you expecting? What do you think the market's going to do tomorrow?
Well, I think investors want comfort, and I think the press conference is the venue that ultimately Chairman Powell can deliver the comfort. He can deliver the comfort by letting investors in a very subtle way know that hawkishness is transitory. If he does that, then I think the way that the market right now is currently positioned, both from the standpoint of sentiment and actual positioning in the market, I don't think the market's ready for that. I think at that point, markets can rally. If he stays away from that, if he doesn't indicate that the hawkishness is transitory, then we know you've got to turn your attention to the Treasury market. You have to focus on short-term yields. Yeah. And I think ultimately, Scott, what you're looking for is some parabolic move that will signal a peak and capitulation. Capitulation is going to come in the market. It's coming in the Treasury market. I don't think it comes in the equity market.
Let's stay away from the transitory word, could we?
Sure.
Right, because the market doesn't want to hear that word anymore from the Fed chair for obvious reasons.
Because it hasn't worked.
What you're alluding to, though, is a peak hawkishness, leaving the market with the belief that this is about as hawkish as they're going to get. Give you 75, and then sort of let's take a look at the data, let's see where we are. We're not thinking 75 and then huge hikes to follow that going forward, right?
So the disposition of the last several months, the current disposition, unprecedented. The Federal Reserve will move away from that unprecedented hawkishness disposition. That's the right way, I think, to frame it. First of all, and I've said this ad nauseum throughout the quarter, I believe that quants and the algos are in control of the market. I think the good thing that's happened here is that this is a U-shaped correction, the first one since the great financial crisis. Why is that good? Because that has given retail and wealth management the time to extract the concentration. Very important is that in the case of Scott Miner, he talked about 20% down and said, I will be a buyer at that level. And I think a lot of people have maintained that thought process. I as well. If the market takes out the June lows, for all of you that 1 year ago said, hey, we don't want to be buyers of this market because the valuation is too rich, here's your opportunity. What happens in a recession is there's three shapes of a recovery: L, U, and V. I think that a valuation recession began in early 2021. If you look at the Russell 1000 Hyper Growth Index, you'll see the PE peak in early 2021 up near 30. That's now fallen below 20. That's an indication to me, first of all, that's where the L-shaped recovery is ultimately going to unfold. But I think you've had this valuation recession and you've had capitulation that's kind of rolling throughout sectors and strategies within the market. So I don't know that the entirety of the market can be defined as being expensive. I'm not sure that I agree with that. And I do think you could find opportunities within the market where reasonable valuations present themselves.
Go. Less than abundance. Look who raised from the